The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, I'm Esther Gulius, the tax lady. And who is talking about tax school?
I was.
Hey, Tiff.
Too.
I got Tiffany Fabian, Christopher Fabian here. We were at the Walk to End Alzheimer's this morning.
Yeah.
It was a wonderful thing.
It was what a good event. It was amazing to watch the people, and they'd put on the shirt, I'm walking from my mother, I'm walking from my sister.
Yep.
And it just really, it said that it is the 6th leading cause of death in the United States, Alzheimer's.
So it was a wonderful event, and if you've never been involved, next year I'm sure they're going to do it again, and unless they get rid of Alzheimer's, which I don't think is going to happen right away. It's a wonderful event, so just encourage
they raised a lot of money, which will go to a great cause.
That's for sure, and it's tax deductible.
Right,
of taxes.
right.
Speaking of taxes, all right, who's going to talk about tax school?
So our tax school starts October 13th, and it meets twice a week. If you're a morning bird, it's in the mornings. And if you're a later after work kind of person, we have an after work session. And we also have a completely stay in your pajamas online session. It meets twice a week. It's
unless you're on the online, then you can do it kind of whenever you want.
You have to purchase the book and the software. It's a great opportunity. Our hope is that you become an employee. And so click egtax.com, call 632-7886.
And if you have a financial
register.
need and you're unable to buy the book, we do offer scholarships.
Yeah,
so
we have 15
you just let us know what your financial
left.
need is, and we have 15 scholarships that we're going to give to people that would think that they would have an aptitude. They're good with law, good with people, upbeat kind of individuals. We certainly would love to have you.
And likes to help people.
Pardon me?
Likes to help people.
And like to help people, which is the most important thing, I think. Then, all right, Chris, we got letters from the IRS, different things this week, right?
Letters. We got letters. Oh, yes, we got letters. One of the common ones is proving your mortgage interest, whether you had a mortgage being held by somebody, you bought a house and you had prepaid interest or points on your closing statement, different things like that.
Don't just pay it. I've been seeing people who get letters, and the thing is the mortgage is in two people's name. One, I saw a father and a daughter. And so the father took the mortgage, but the 1098 was in the daughter's Social Security number. So don't just pay what's on the letter.
Right, and that's part of what we do at EG Tax, right? So if you get a letter, you right away should think of us, and you come on in, and we'll, if you did your own return, bring it in so we can look at it for you. The other thing is, one of the things that we found out this week, that Equifax has been keeping a big secret. What is that secret?
And that is that they had a breach in their infrastructure, and how many people's information was possibly compromised?
Information. And so Equifax's security system was breached, and so they took people's names and identification, Social Security numbers, and if you're somebody that wants to find out whether your information was breached, you can do that.
Yeah,
and how do you do that, Chris?
Well, I have the URL, but I want to say during the week, Esther told me about it, and she said, go on the site and check to see if yours or Chris was, and it said both mine and Chris's was compromised.
And mine, and my husband's.
Yeah, so I just couldn't believe it. You go to www.equifaxsecurity2017.com, #potential impact hash.
And I'll tell you, if you just do
Google,
if you do Equifax 2017, it'll get you to the
and
place.
if you click on this URL, it'll tell you put in the last 4 digits, 5 digits, 6 digits of your social, and it'll tell you, yes, we think your information was compromised.
And then they will cover you for a year with which credit thing? Do you know?
I don't know.
I think some identity.
And you know what?
theft.
I'm going to put this on our Facebook too. This URL.
There you go.
Yeah.
So again, Equifax had their information about all kinds of people compromised. If you want to find out if your Social Security number and basic information has been compromised so that you can start watching your credit more closely and get the free registration to have your credit monitored. I think they're using LifeLock. It is LifeLock. You can go to Equifax 2017 and then follow the prompts, and you'll see if your credit was compromised. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on the cell phone, and I got Jim from Ransomville hanging around on the phone. Hey, Jim, how can we help you, sir?
Hey, pretty good, Esther. I was at the last meeting of the high water issues on Lake Ontario at Ransomville Fire Hall and listened to your
Me.
That was Christopher.
And actually, I've been to the last two, and the people that left early made a big mistake on the meeting before.
That was very nice of you to say.
Some great issues. My question is, I have two lots. You know, I live on one. The lot next door is just, I cut the grass. So basically, can you take a casualty loss on both those properties or just your residence?
You can take a casualty loss on anything that has happened to you that's sudden, not due to wear and tear, that is not due to your neglect, which has a decrease in fair market value from the one time to the other, a short period of time. And so in this situation where in the all of a sudden the water got high and the lake went away, when you get your appraisal where they do it, this is what it was worth on this day, this is what it's worth now, that decrease in fair market value is what counts. Now, you could have, like, for instance, you'd have your house, your lot. You could also have been in the hurricane last week and have a house in Florida and have a non-insured loss there, and that's a casualty loss, and those all get added together, and you then reduce the total losses by 10% of your adjusted gross income plus $100, unless they come up with something like they did with Katrina. In Katrina, they said that they were going to waive the 10%. I think they waived the 10%, didn't they, Chris?
Yes, they did. For Katrina,
right.
They did.
So who knows? They may be waiving it for the other two hurricanes. But for what we would have here in Western New York, they'd still have the 10% floor. But yeah, you can, as many things that got ruined due to no wear and tear, normal wear and tear, or fault of your own that was sudden, then the decrease in fair market value is going to be your casualty loss.
Yeah. The other thing I was wondering, was this actually declared a federal disaster by?
It was declared a New York State disaster, and it was interesting because the last meeting that they had at Porter Center, I think Collins was there and said it was going to be declared, but it wasn't, was it yet?
Not yet. And, like I said at the meeting, I hate to say it, but I think Houston and Florida is going to come first over Lake Ontario for President Trump.
Houston and Florida already were at work.
Yeah.
They declared those right away. But I think somebody should call Collins's office, hint, hint, and start complaining so that they can put some pressure, not that he doesn't have enough pressure, the president, but put some pressure on him to declare Lake Ontario residents with the disaster area.
Yeah, but assuming that doesn't happen, that doesn't affect the we can still take it as a case.
Yeah, you still have the loss. The difference is when it's a federally declared disaster area,
bonus.
It gives you a lot of flexibility. You can say, well, in 2016, I had more income than in 2017, so I think I want to amend the 2016 return and put the casualty loss on that year as opposed to 2017. So that would be the benefit.
Okay.
If it's a federally declared disaster area. Otherwise, you have to take it on 2017.
Yeah, okay.
Okay?
Thank you very much.
Thanks, Jim. Thanks for coming.
Good luck.
Thank you. Bye-bye. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We're going to take a short break, and we'll be back on the other side with your questions.
You're a rich girl, and you're gone too far, 'cause you know it don't matter anyway. You can rely
on the old man's money. Hey, I'm Esther Golias, the tax lady from EG Tax. And if you
That's
have
not
any
true.
question, pardon
You
me?
can't rely on the old man's money.
No, you can't. I'm going to tell you, I'm not sure you can rely on anybody's money anymore. I'm not, with $20 trillion budget deficits in the United States, it's really a problem, and these storms don't help at all, right? Yep. Anyway, we're talking taxes, 8030930, 8030930, star 930 on the cell phone. And, I thought it was important that we would talk about how, a lot of people think that, people say to me, oh, I'm afraid I'm going to get hit with capital gains. Do you ever hear that?
Oh, yeah.
So I thought, people don't even understand, and here we're talking about all these this tax simplification and all this stuff. And right now there's 5 brackets, right?
Right.
But the brackets don't make it complicated. Do you guys think it's the brackets that make it complicated?
No, as a matter of fact, I was with the pastor yesterday, and he was getting consultation because he has a housing allowance. And he's like, well, what bracket am I going to be into? Tell me what bracket if I do this. And I said, don't even worry about the brackets. I'll tell you about the brackets, but don't concern yourself with the brackets.
Yeah, so the brackets don't change the complexity.
No.
The complexity of the tax law is everything that every line of the tax return is full of all kinds of complications.
Right,
all right.
right.
And so I thought, I'd explain about how different things are taxed because the type of income you have determines what you're going to pay in taxes.
Right.
Right. And what else determines what you're going to pay in taxes? Your filing status.
Your
right?
filing status. Yep.
Right. And
deductions.
What else?
Credits.
And credits.
Right.
And adjustments.
That's it.
Right. So all those things.
I should get an AMT.
And that's extra taxes. Okay. So what's taxed at your regular tax rate? And by the way, let me tell you how the brackets work. The 10% bracket is for anybody, if you're single, who has taxable income of $92.75 or more. If you're married filing a joint return, it's
less.
double. Less. $92.75 or less. If you're married filing a joint return, it's $18,550 or less.
That's after your standard deductions or itemized deductions and personal exemptions.
If you do the 1040, it's on page 2.
Right. And so, like, if you're over 65, your standard deduction, personal exemptions, and you get a little bit extra for being over 65 is like almost $21,000 filing a joint return. So if you have income under $21,000, not including your Social Security, because at that level it's probably not going to be taxed either, you're going to pay zero.
Right.
So you'd be in the
God.
0% tax bracket,
Right.
right? In order for you to be in the 10% bracket, in this case, you'd have to have income of $38,550, and you take off your standard deduction, and you still be in the 10% tax bracket. Then the next level, so everything up to, let's just do married filing joint because it makes it a little easier. So the first level is $18,550 after deductions and personal exemptions, right? Then the next level is taxed at 15%. So that first level's at 10. The next level up to $75,300 is going to be taxed at 15%. So that first level at 10, the next level up to $75,300. So you're up to about $100,000, right, Chris?
Right. So your first, for married filing joint, the 10% income bracket stops at what? Again.
No, at married joint, $18,550.
So the first $15,850 gets taxed at 10%.
Right.
If you're $1 over, only that dollar would get taxed at 15%. So it doesn't go back to $1.
Right.
So that's where a lot
So
of people get confused.
Say, I don't want to get in the higher tax bracket. If you have $1,000 in that next tax bracket, it only costs you 5% extra, right?
Yep.
5%. So on $10,000, it would cost you $500.
Yep.
Right?
No
Extra.
big deal.
So you don't want to pay, but it's not like the end of the world. So the next bracket then goes up to $151,900. Plus, that's after your personal exemptions, itemized deductions, and that's at 25%. Now, the first level is at 10, the next level is at 15. That next level, like Chris says, so if you had taxable income of $75,301, $1 would be taxed at 25%. The rest would be at 15 and 10. And then the top level is at $190,150 married joint, and that's at 28%.
And you know, a lot of times when I'm explaining this to my client, I'll write it down and then I'll show them their income and I'll say, this is your income that lives here in this bracket, and then this little bit lives here. And so they're like, oh, it just isn't awake. People just don't get that.
Well, and they don't know. And so here we listen to these politicians talk about taxes and everything and tax simplification, and I'm not even sure they understand how it works.
I agree with you.
You know, because I was reading an article the other day, Wall Street Journal, that says there's 70,000 pages of tax code, so they have to like throw it out and start from scratch. But you're thinking of credits and deductions, and so
really,
it's
when
interesting.
they're
and
making the
when
law,
they start doing it,
they
believe
should
me,
pull
we will let you
somebody
know. I'm Esther Gullius,
like
the
you
tax lady from EG Tax. 8030930, 8030930, star 930 on a cell phone. Yes, Mr. Chris.
I just want to clarify something. You said the top level was 28%. It's
Well,
not,
it's-
but that's where you read up to. There's still two more after that. It goes all the way up to 39.6%
Yeah, right.
for the high.
The high, but we were at 190,000.
Right. I know, but I just didn't want
And
people
that's
to
true.
call in
That's
and
true.
say,
That's
wait a
true.
minute.
That's true. Thank you, Chris. I appreciate it. Let's go to Eugene in North Carolina. Hi, Eugene. How can we help you, sir?
Thanks for taking my call, Esther.
Yeah, what can we do for you?
You mentioned about the Equifax data breach that recently happened.
Yeah.
I had my credit report profile froze at all three credit.
That's a good idea. Good idea.
Now, if the credit breach at Equifax, if they stole Social Security numbers and maiden names and so forth, did they also steal the PIN that's used to unfreeze the credit so that they could unfreeze my credit report?
We don't know the answer. I don't think that the pins are something that they could have stolen.
Who knows?
But we don't know the answer,
really
and
don't
that's
know,
really
Eugene. But
scary.
what I would do is I would contact Equifax. But I will tell you, freezing your credit
That's what they're saying.
is a really good idea, because then nobody's going to give you any more credit because you're controlling it. But or I thought you did it after the fact, but you did it before,
I did
right?
years ago.
Wow. And they said that is it a pain, Eugene, when you want to get something to unfreeze your credit? May I ask?
You can go online and unfreeze it, and when you unfreeze it with the PIN, you can choose to unfreeze it for temporarily, just for 7 days or 14 days, if you need to have someone check your credit or something like that.
That's really great. That's a great suggestion. And I will tell you, if you're somebody that found out that your credit, your information was breached because of this Equifax thing, what Eugene has done is a really great suggestion. However, he might have done it before, and they might have taken his PIN. I really don't know. I think the only people you can call is Equifax.
And if you find out the answer, if you would send us an email via our website, we really, really would appreciate it, so we can get the word out.
All right, Eugene?
Hey, thanks a lot.
Thank you, sir.
What a smart young man.
Yeah,
He
that's
sounded-
really smart.
That
is really smart. So in case somebody's just tuning in now,
wow.
Equifax just announced this week that they had a data breach. Was in May or June,
and they held on to the,
and they didn't let anybody know till this week, and they are providing free LifeLock for a year. But but like Eugene mentions, you can freeze your credit so that nobody can have access to it just by going on and entering that information online.
And he asked a really good question. Would they have been able to obtain access to the PIN that you use? That's a really good point.
Who knows? All right, 8030930, 8030930, star 930 on your cell phone. Okay, so we're talking about how your income's taxed. So taking a look at these tax brackets that we talked about, this is what's taxed at an ordinary rate. No special dancing.
And then I also want to add that the Equifax people, they talked about people selling and dumping off the stock before they let the information out too at Equifax, the big people.
Oh, that's right, so that they wouldn't have taken a financial hit.
Yeah. Talk about insider trading,
right?
Perhaps. I know that's opened them up to that discussion.
Yep. All right, so what's taxed at ordinary income? Wages. So when you're working.
Right.
Non-qualified dividends and interest. Interest for sure, but non-qualified dividends. What's a qualified dividend?
Qualified, my understanding is that it's generated from U.S. entities and U.S. companies, and it's taxed at a favorable rate.
Right. You got to have it for like what is it, 30 days before the dividend is issued and 30 days after the dividend is issued to have it qualify as a qualifier.
But if it's non-qualified, it's taxed just like wages.
Right.
Yep.
Net rental income. If you have rental property after your expenses, the bottom line is taxed just like wages. Self-employment income is taxed just like wages, but you also have to pay FICA, self-employment taxes, Social Security and Medicare
Right.
on the bottom line.
Right.
Pensions and annuities are taxed at just like wages,
ordinary,
right? Just
yep.
plain old wages, unless it's a New York State return. And if that's the case and you're over the age of 59 and a half, they let you subtract the first $20,000 that you got in pensions and annuities, or unless you're retired on a New York State, federal, or municipal pension, and then it's fully tax-free.
Right.
On the
That's
state.
just on New York.
Right. And this also goes true for IRAs as well.
Right.
Individual retirement
Right.
account.
Alimony's taxed just like wages. Debt cancellation, if you can't get rid of the debt cancellation because there's a loophole, then it's taxed as ordinary income. So when people are saying, you can pay pennies on a dollar, you probably can, but then you're going to pay taxes on what they forgave. Prizes,
Oh, he's playing the mood.
unemployment, and taxable Social Security, but we're going to talk about taxable Social Security on the other side of the news.
And Sally and
I'll be
Susan.
back on the other side of the news, 8030930, 8030930, star 930. Sally Sue will be with you in a minute.
It's been 1 week since you looked at me. Cocked your head to the side and said I'm angry. 5 days since you laughed at me, saying get that together, come back and see me. 3 days since the living room. I realized it's all my fault.
I wonder what he's talking about. It's been 3 days since you looked at me. Anyway, I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on cell phone, and we have Sally from Elma. Hey, Sally, how can we help you?
Hi, I was listening to Clark Howard's podcast. I think it was Thursday's episode. He had most of the program about Equifax, and he stated that Equifax used a very company for their PIN numbers,
Okay.
and a 12-year-old could hack into the PIN numbers.
All right, so it's a different company altogether for the PIN numbers. Is that what you said? Because we kind of lost you there for a minute. Uh-oh, Sally's gone. Did you hear what she said?
It sounded like a different company.
So what she's saying is that guy shouldn't worry.
Right.
But I still
I
would
would
make the call.
Yep.
I would make the call.
And I hope
when
we've
in
heard
doubt, make the call.
Yep.
And thank you, Sally.
Yeah, that's
thank
for
you.
sure.
Thank you.
And we're going to go back to phones and talk to Sue in Amherst. Hi, Sue. How can we help you, dear?
Hi, thank you for taking this call.
Yeah.
I did this Equifax thing online, and I put my last 6 numbers of the social in, and they came back with the response that I may have been hacked.
Right, right.
Me too.
Should I go ahead and fill out this?
I would.
Yes.
I would. At least then you're going to get free credit monitoring. And then the other thing is, like our guy from North Carolina that said, it's really a good idea to put a limit on your credit. Then even if somebody does steal your credit, they can't use it because it's not, the credit limit is controlled by you.
Yeah.
And then, Susan, I want to tell you that Chris and I, it also said it May for us and Esther,
mine
too.
is a May.
And then it says, after I fill out the sheet, it said... because of they're inundated, and you're going to inundated. It's going to take days for us to get the email that's you have to click on to authenticate yourself. And it's been 3 or 4 days. I still haven't gotten this email to authenticate myself. So on Monday, I'm going to call Equifax, which I don't think I'm going to have a lot of luck with.
Oh, I tried the 800 number.
Yeah.
It didn't even work.
Yeah, that's what I'm thinking.
But, keep after it. But I think probably our friend from North Carolina had a really great idea. Limit the amount of credit, and then it won't make any difference. It shouldn't make any difference.
What do you mean limit the credit?
What you can do is you can freeze your credit.
Oh, yeah, that's what I was thinking of.
Yeah. So that's a great suggestion.
I got plenty.
All right, good luck,
Chris
Sue.
wants to say something.
I was just going to say, what a great idea for seniors, because how many seniors don't even have to get a new house, got a car loan, and
they never check their credit.
Right,
either.
they should freeze their credit.
And then use the PIN to activate it when they need to.
Yep.
Just like I think for your mom, you went to the bank and she
Oh,
hadn't heard.
that was interesting because yesterday
She's
I went
a
to the
senior.
bank because my mom doesn't do a lot of banking, and they said that we had just frozen her account because there was no activity for 3 years. Thank God they gave me her money, but
why didn't they send her a letter?
I don't know why they didn't send my mom a letter
because it would have cost money.
Anyway, but that's what's important is you want to make sure that you're watching your credit. And this whole Equifax thing just kind of reminds us of all that. Even if you don't need credit, you certainly wouldn't want somebody playing helpy selfie on your credit account. Mm-hmm. I'm Esther Gillies, the tax lady. 8030930, 8030930, star 930 on a cell phone. All right, so we were talking about what's taxed as ordinary income. Unemployment is taxed just like wages.
Mm-hmm.
And
an
taxable
Social
Security, if your Social Security is taxable, it's taxed just like wages.
And a couple of years ago, New York State started where they don't mail you your unemployment statement at the end of the year. And so a lot of people are getting letters because they didn't include it as income on their tax return. You had to go and download the form from New York State unemployment. So just be careful they don't mail you the form anymore at New York State.
Again, if you get those letters. All right, so these are like broad categories. All right, now, this is what you pay 0% on. All right, so on this all this income we talked about, this is what you pay at whatever tax rate you are, and we talked about the tax rate. You pay 0% on capital gains if you're in the 15% bracket or lower. So when people are saying, "Oh my gosh, I'm going to get hit by capital gains," getting hit by capital gains for many people is not much of it's not a hit or it's not a hit or a very small hit at all. You actually would like it to be to capital gains because you pay at a lower rate. Right, Chris?
You pay 0% if you're in the 15% bracket or the 10% bracket.
And if you're in the 25%, what do you pay?
15%.
So it's a 10% savings. So capital assets, sale of capital assets is a good thing.
Right. And if you tax plan right, you could leave it where you're still in the 15% for this year, sell the rest next year, and you'll be, and you can take advantage of the 0% tax bracket.
So when you're thinking that, you're getting hit by capital gains, the truth of the matter is if you do some planning, you might not pay any taxes at all. Wow, I'm hearing some lovely music, Frank.
That was me.
Oh, it's her. Oh, my God. All right, the other thing at 0%, qualified dividends.
Dividends.
So non-qualified dividends taxed as wages. But qualified dividends are, if you're in the 15% bracket or less, 0%. Right?
Yep.
Welfare benefits, social services, 0%. You don't pay anything on it.
Yeah.
VA benefits are completely tax-free. Child support, completely tax-free. Scholarships used for education on a degreed candidate, 0. You pay 0 on that.
Right.
Employer-provided health care, 0. Employer-provided education up to $5,250, 0.
Cool.
Housing allowances for clergy, 0. Renting your personal residence for 2 weeks or less, 0. And so, like, if you got the what PGA tournament coming, and you're living in
the
Rochester.
Masters. The Masters is in Georgia.
All right, whatever. They
U.S.
don't do
Open
Masters in Rochester.
They used to, not really anymore. Well, how about if you're in Long Island and you didn't say that right, but
Long Island.
They just had the U.S. Open for tennis.
So 2 weeks or less, completely tax free. Reimbursement for business expenses if it's receipted to the employer, 0. And sale of your personal residence, which I think you got to listen to this, is tax free. For the first $250,000 in gain if you're single, $500,000 if you're married filing a joint return, if you had the house as your personal residence for at least 2 years. Those are at 0%. So, you got to be really careful about what you're talking about. I'm Esther Gillies, the tax lady, 8030930, 8030930, star 930 cell phone. We got Carol in Lancaster. Hey, Carol, how can we help you, dear?
My question is, I had to take RMDs here, and I wanted to know, particularly for the state, I believe one is from a regular simple IRA, and the other one is from a employer-sponsored retirement plan, a 403B, and it wasn't subject to ERISA. So do I have to report those as income on my state income tax?
Well, they got to go on as income. The question is, what's your other? Do you have any other retirement accounts you take money out of?
Yeah, I had to take money out of a regular IRA.
Right, the IRA and the 403b. But do you have any regular pension?
No.
No. Okay, so then between the two of them, the first $20,000 would be tax-free on New York State.
Okay.
So was the distribution less than 20, Carol?
Yes. But
then it's all going to be completely tax-free in New York State.
What I'm going to do is I'm going to take, if I can go. What was it? The first how much?
The first 20,000 collectively between your IRA and your 403b and any other accounts, as long as they're 20,000 or less.
Okay.
Then it's all going to be tax-free in the state. But like Chris said, he's absolutely correct. You start off with it taxable on the federal. That figure carries forward to New York State, and then that's a subtraction under the subtraction column.
Okay, and then because the reason I wanted to know is because what I was going to do is transfer then some of the money from my IRA to a Roth, so then I can get up to the max.
Yeah, right, but you're going to pay tax on the federal.
On the federal.
Yeah.
Which is much higher than New York State.
Yeah.
I would call us before you do that.
Yeah, because, see, Carol,
run the numbers.
How much are you taking out of, do you think that you're going to take out this year out of your 403b and your IRA?
Let's see, I started trying to calculate, and it was only going to be like an extra $4,000 to get me up to around a $10,000 bracket for the...
Okay, well, taking that extra $4,000, as long as you're not paying any taxes on it federal, I would definitely take that money out because that's just good tax planning.
Yeah, that's what I thought.
But Tiffany's right. I would suggest you give us a jingle so we'll give you the exact dollar amount for you.
Okay.
Especially before you do the conversion.
What number should I
call? 632-7886.
7886.
Okay. Thank you, dear.
Have a good weekend.
All right, have a great weekend. Bye-bye. I'm Esther Goulias, the tax lady, 8030930, 8030930, star 930 on your cell phone. Remember Sally, who was cutting out? She's cut back in. Hey, Sally, what were you telling us?
Hi, Esther. Yes, I was telling you that Clark Howard did have almost a whole podcast. I think it was Thursday, one of those days. And, yeah, I think he's using a different company. They're using a different company for
the pins.
And he said anybody could hack into it, even a 12-year-old. And he also stated that don't even bother calling to find out if you've been compromised because it's going to say everybody's been compromised.
All right. But, did you see, I was reading that, do you know what their password was that was protecting everything information? Admin.
Oh,
that was their password, ADMIN.
Did they use caps in anything?
I don't know. Admin. Now, that could be baloney. Half the stuff you read on the internet, you don't know really if it's true, but that's what it did say.
Wow. So they said don't even bother, potentially. That's what.
But anyway, the bottom line is everybody's got to protect their own identity as best as possible. And I really appreciate your phone call back, Sally.
Okay, thank you.
Thank you, dear.
Thank you.
I'm Esther Goulias, the tax lady, 8030930, 8030930, star 930 on a cell phone. We're going to take a short break, and we're going to be back with your calls on the other side. Hey, I'm Esther Goulias, the tax lady. Frank, what is that?
This is a song called Superman by Goldfinger.
Wow, they take time getting into the meat of the story, don't they?
Didn't he play in a James Bond movie? Or wasn't that the title?
I only remember the song because it was in a Tony Hawk Pro Skater game.
Oh, what we think of here in the studio.
We do. I'm Esther Goulias, the tax lady from EG Tax, 8030930, 8030930, star 930 on cell phone. We got Mr. Billy, who's been waiting a long time. How can we help you, sir?
I'm sorry.
Hey, Billy, how can we help you, sir?
Oh, hi. Yeah, my wife, she has a life insurance, 2 life insurance policies. We took loans on them. They're variable life, and this has been the biggest hunk of junk could bought. And basically, she's been. The promise was she pays on it 12 years, doesn't have to pay again. and that is supposed to grow. Well, she went 04, 05 when she signed in. It went through the crash. It was all tied to the market. She dumped in all through, the low, all the way to the triple, more than triple now. And so the cash value barely grew by $100 because of the fees that they're taking for all those years.
Right.
Which I was aghast. I'll never buy a variable life insurance policy again.
Right.
But here's the crux of the matter. We took loans on them, and now we're going to cash them out. There's a little bit more they owe us, about $2,700 on the surrender.
Mm-hmm.
They come back at the end, and according to their calculations, we're going to owe on a gain of $4,000 that I have no idea where that gain is coming from when...
All right, so here's the thing. You got some your policy on the left-hand side is growing, and I'm going to use the word growing advisedly,
loosely.
Okay? It's not really growing much, but it's growing on the left-hand side. And so, and it's growing, and the thing on this side is taxable. On the right-hand side, you took money out as a loan. The loan money is not taxable, okay?
Mm-hmm.
But when you cash in the difference between what your loans were and the policy from when you made your premium payments plus the appreciation minus what you borrowed is going to be taxable.
Okay, well, here's my question. Are you kidding me that, like, the appreciation, does that take into account any of these enormous fees that ate up the bulk of what
It should. I mean, what you should do, Billy, is ask them for an accounting. And if you want to bring it in, there's no charge. We'll show you exactly how they came up with it. But
and make sure
basically,
it's correct.
It should be the total value, which should be net of those fees from what you took out, and the balance is going to be, and that's going to be taxable because the loans weren't taxed.
Okay, so that doesn't make sense then if they're saying there was $4,000 that we're going to have to pay on.
It all depends on how much growth there was. So what I'd suggest you do is you want to come in, we'll call the insurance company with you.
Okay.
All right, and there's no charge. So we're at 632-7886.
Okay, thank you.
Thank you, sir. Bye-bye. Yeah, because that's what they do is the growth is tax deferred.
Right.
Yep. I mean, it could also be that maybe when they took the loan out, it was worth more money, and now the value, like if it was tied into the stock market, those stocks may have decreased. But the last couple of years, the stocks have been going through the roof. So I don't know.
I can't hazard a guess.
And if he wanted to, I think Esther has a really good idea to call and ask for an accounting.
Right.
Almost bring it to like a financial person too, or
well, of course, it should be pretty simple.
It
math.
should be.
You've paid $100. It's now worth
120. You paid. Yeah.
Right.
The
and
growth.
so the difference is 10,000. You know, I mean, that's the way it should be. Okay, I wanted to talk about. We're talking about how things are taxed. You pay more. So we did what's not taxed. You pay more if you have self-employment income because you have to pay FICA.
Mm-hmm.
And you pay both sides of it. When you're an employee, half of your FICA is paid by your employer. The other half you pay. When you're self-employed, the burden is on you because you are, in essence, you're employing yourself. So you pay more for self-employed. You pay more if you have alternative minimum tax. Now, somebody wanted to easily explain AMT?
AMT is alternative minimum tax. What the government looks at, I believe, for married filing joint, AMT starts at around $80,000. They're saying if you make X amount of dollars, we don't care what your deductions are, you're going to pay Y in taxes.
Right.
So if you had, we'll say X again, but you had a lot of charity, a lot of work expenses, all that brings your income way down where your tax, we'll say, is like going to be $3,000. The government's going to say, no, I don't think so.
We have an alternative way to have, and it's a minimum. You have to pay a minimal amount of taxes because we have an alternative way to compute the tax liability. That's one of the things we're talking about getting rid of.
And a lot of times, people who make a lot of money, they might have a lot of write-offs. And so if you have a lot of write-offs, it sees that and it keeps raising your alternative minimum tax. I was doing a tax return the other day for a person who has a Schedule C, and he had a lot of write-offs, and the AMT kept kicking in after we added write-offs to a Scheduled C. It kept building up his AMT, right? That was the 2106.
Yep.
Well, the 2106 is
different
out
from this.
on a
Right.
Schedule C. It wouldn't have built
But
it up.
we had, I remember we had a lady that worked for us that got hit with AMT because she had 9 kids.
Right. All right. The other thing that you pay more is if you sell collectibles.
Right.
Because capital gains you get a deal on, but on collectibles you pay at a higher rate.
Yep.
Right? And a collectible might be if you're collecting Yadros or
Postage stamps.
Right, or trading cards, right?
Yep.
And you pay more if you sell depreciable machinery and equipment because that ends up getting taxed at the same rate that wages would be.
Yep.
Whereas if you sold it as a capital gain, you get the special deduction.
Right, but if you're using it as a business, you have to use depreciation, and then
Right.
it's a business. Yes.
Now, after all of that's done, then there's credits. There's the education credit, the earned income credit, the child tax credit, there's business credits, there's health insurance credits, right? So let me just give you an example here. Let's say we got a couple that make a little over $100,000. After they take their personal exemptions and standard deduction, they end up with like $80,000 adjusted taxable income. That tax bill is $6,667. But we're not done because one of their kids might have been in college and they have a $2,500 credit. That knocks down the liability to $4,167. But they got 3 kids under the age of 17. That reduces their tax liability by another $3,000. So their tax bill is $1,167 on their $100,000 in income. That's how it really works. And a lot of people don't understand how taxes work, and many people are not paying any taxes
I think
at all.
you're right. The people that are trying to make changes to the tax code, I don't think they really get it all the way.
Well, we'll
either.
see what they do, because sometimes they make it worse.
I got to say one thing.
Yep.
If this is piquing people's interest, come to our tax school. Because this is what we teach.
That's
this
true.
This whole thing is basically our tax course.
Well,
a really fast class. But there's a lot more. But I'm just saying, there's people out there that like, wow, I want to learn about this. This is what we teach.
That's true.
We don't hold anything for ourselves.
And
we want to teach
We
people.
teach federal and state. So when you're learning the federal, you're also learning the state of New York. And even if you're just using it for your own knowledge, right? And it's a great class. And the other thing people tell me is, I'm intimidated by computers. We actually like it that you don't know computers, because we're going to teach you on our software so that you can, really it's going to do the math for you.
Yeah.
What you're going to do is input your tax knowledge that you're
Data.
learning. And people are just absolutely blown away. One of the things that people aren't aware of is how the earned income credit works.
Yep.
So the earned income credit is a credit they basically pay you. So if you have what's called a qualifying individual living in your home, that would be a minor child under the age of 19, or a child under the age of 24, or a disabled child, or your brother or sister or stepbrother, stepsister, and they live with you and they're minor child, or again under the age of 24 in college, then you're working, then the federal government may give you money that you never paid in, and the state of New York
even
as well.
if you have no dependent and you're between the ages of 25 and 65 and you're working, same story. Under 65, same story.
You get an earned income credit.
Yep, lower income person.
Right, but again, a lot of times people will call and say to me, how much is my earned income credit? I'm now on Social Security.
Yeah.
That doesn't work because Social
Or-
Security is not wages.
How many people do we have come in that are used to this big refund because of earned income credit, but now their they can't claim their child anymore, and they end up in a tax
Or
balance due
I was
because
doing somebody's prior year tax return and they were permanently and totally disabled, and so then you can move up their wages to
Their
their pension
disability.
to wages, and then they get an earned income credit. And I faxed over her tax return to the IRS because she was behind, and the IRS didn't even understand it. Well, at least that person didn't understand it. She goes, "Why did you take his pension and put it on line 7?" And so I explained it to the IRS person. So, you do what you got to do.
You do. And, that's the other thing. If you're we're now in, I can't believe it's the middle of September. How can it be the middle of September? So beautiful out. But we only have 3.5 months before the end of the year. If you would like to look at a mid-course correction, maybe so that you can affect some of the changes that would save you money, just like the lady with the RMD. What she was saying is, I don't pay taxes until I get to X amount of income, so why wouldn't I take more out of my RMD and roll that over into a Roth, which will never be taxed? Interestingly enough, that's another thing that they were talking about, is getting rid of the deductible.
Making everything
Roth, because they know that if they're lucky, you'll never collect on the Roth. Because even though they say it'll never be taxed, there's a lot of things going on in the government,
Yep.
And again, during the week, if you need any help, if you're interested if you have any tax questions, just give us a call. I just had a lady that called me when I was on my way back from the walk, the Alzheimer's walk, that was saying that she owes all these student loans and she doesn't know how to get rid of her liability. She doesn't have a job. So I was telling her about the offer and compromise, and I thought that we'd be able to get rid of the liability.
Yep.
So if you have an outstanding liability, you're getting letters. If you're somebody that thinks that you would like to come in to have us look at your your taxes for this year, make some suggestions. There's no charge. We'd be happy to help you with your tax situation. And again, if you have questions, you can go to our website at egtax.com, ask the tax lady, and I'll get right back to you. Right?
That's right.
Absolutely.
Probably within 2 hours.
Or 2 minutes.
Yeah.
2 minutes, 2 hours. It doesn't take long. Until next week, I'm Esther Gulius, the tax lady. And by the way, thanks for your prayers. My house is fine in Florida, minor damage. With Chris Fabian, Tiffany Fabian. Have a good week. God bless. Bye-bye.